Welcome back to Smart Stock Sam, the channel where we cut through the noise, decode what the smart money is actually doing, and hand you the playbook before the crowd even wakes up. I'm Sam, and today we are diving deep into one of the most compelling mispricings in the entire market right now, BitMine Immersion Technologies, ticker BMNR. Here is what we are covering today, a hidden $10 billion asset base that the market is completely ignoring, the exact options strategy built for this elevated volatility environment, precise price targets for the week of June 22nd through the 26th, and one institutional catalyst that guarantees massive buying pressure is coming, regardless of where crypto sentiment sits. This is your upfront roadmap. And I promise you, by the time we get to the trade execution setup, you are going to see this entire picture in a way that makes the current price look almost absurdly cheap. Let's get into it. So let us start with the executive summary, because the setup here is fiercely bullish and the disconnect is enormous. BMNR recently suffered a steep 15% contraction, driving the price down into the $15.80 to $16.20 range. Now here is the question that should stop you cold. How does a company with over $10.4 billion in total Treasury assets end up trading at a market capitalization of only $8.68 billion to $9.2 billion? You do the math on that. The stock is trading at a meaningful discount to the actual value of what the company owns. The analyst community certainly did the math. Consensus price target is sitting all the way up at $34.50, implying over 100% upside from current levels. So, what triggered the sell-off? A widely misunderstood preferred stock offering caused a wave of algorithmic selling. The bots saw a new yield obligation hit the books and they dumped the stock. But here is the critical mistake they made, and it is the mistake that is creating your opportunity right now. They saw the liability and completely ignored the asset expansion happening simultaneously underneath their noses. That is the disconnect, and that disconnect has now created an explosive convergence of catalysts, extreme oversold conditions in Ethereum, a Russell 1000 index inclusion that forces institutional allocation, and a short squeeze powder keg that is just waiting for a single spark to ignite. We are going to walk through every single one of these. But first, let us look at the raw fundamentals that make this setup so rare. The calculated book value of BMNR, when you divide the total Treasury assets by shares outstanding, comes out to $21.67 per share. The stock is currently trading in the mid-$15 range. Let that sink in. You are buying $1 of assets for roughly 73 cents. That is your margin of safety. That is the floor underneath this trade. The gap between the market cap and the Treasury value is approximately $1.4 billion. $1.4 billion of value that the market is currently just leaving on the table. And the reason for it all comes down to that preferred stock offering and the algorithmic misreading that followed. Understanding exactly why that misreading is wrong is the key to the entire thesis. Now, let us deconstruct what BitMine actually owns, because this is where the story gets genuinely exciting. Management is executing what they call the Alchemy of 5% strategy. The goal is to systematically accumulate exactly 5% of the entire global Ethereum circulation. And here is the jaw-dropping part. They are almost there. Their primary treasury position currently consists of 5.62 million ETH, representing 4.66% of the global supply. But ETH is not the only asset in the vault. They also hold 204 Bitcoin, $502 million in cash and marketable securities, a $180 million stake in Beast Industries, and an $88 million position across 8Co Holdings and ORBS. This is not a speculative startup burning through cash. This is a company methodically constructing one of the most concentrated digital asset treasuries in existence. So why is the market pricing it like a leaky rowboat? Let us get to the bear argument and why it falls completely apart. The bear case in its entirety rests on one thing: the preferred stock dividend burden. BMNR recently issued 3.5 million shares of Series A preferred stock, raising $273.8 million. This comes with an obligation to pay a $0.10 and 56/100ths weekly dividend, translating to a 9.5% annualized yield. When algorithms and retail traders saw that figure, they panicked. And that panic is your entry point, because here is what they all missed: the staking neutralizer. BitMine has 4.72 million of their ETH staked via the Maven platform. That staking position generates a projected $219 million to $226 million in annualized staking rewards. Run that math against the preferred dividend obligation. The staking rewards completely, 100% offset the dividend burden. The company has engineered what is essentially zero net cost leverage. The narrative that this dividend drag will crush the stock is not a legitimate concern. It is a quantifiable bear trap built on incomplete analysis. And while retail was panic selling based on that incomplete analysis, where was the smart money going? Straight into the bid. This is the part of the story that really tells you something important. While the crowd was dumping, institutions were quietly backing up the truck. Total institutional ownership now exceeds 200.3 million shares, locking up more than 35% of the float. BlackRock, and yes, that BlackRock, increased their position by a staggering 165.6%, now holding over 9 million shares. Clear Street Group accumulated a 496% increase in their position. Citadel Advisors raised their holdings by 113%, and Cathie Wood's ARK Invest is actively buying the dip, now holding 9.46 million shares. Does that sound like a company that is broken? And it is not just institutional money, insiders are buying too. Chairman Tom Lee and his internal team used their newly raised capital to acquire an additional 76,881 ETH in a single week through open market and OTC transactions with FalconX and BitGo. When you see analysts, institutions, and company insiders all aggressively buying simultaneously, there is one coherent message being sent. The $34.50 consensus price target is not fantasy. It is a reflection of what this company is actually worth. Now let us talk about the technical picture, because this is where short-term traders find their exact entry. On the surface, the daily chart looks uncomfortable. The 200-day moving average is sitting all the way up at $18.43. The 50-day moving average is at $16.27. The current price sits below both of those lines, which is why traditional daily chart indicators are flashing a strong sell signal. But here's the thing. That is the algorithmic trap. The real structure tells a completely different story. A consolidation base is forming right now at these levels. The 5-day moving average has just generated a fresh buy signal at $15.71. The 14-day relative strength index is sitting right in the neutral zone, between 40 and 50 DOC, not overbought, not oversold at the stock level, which means there is plenty of room for upside momentum to build. Your structural support floor is at $14.31. Your overhead resistance to crack is at $19.01. Those are your guardrails for this trade. But because BMNR is essentially a massive Ethereum holding company, we cannot analyze it in isolation. We have to understand the macro backdrop for Ethereum itself. And what is unfolding there is one of the most historically significant setups in years. Think about it this way. When was the last time you saw a blue-chip digital asset with a market cap in the hundreds of billions sitting at weekly RSI readings that have historically preceded massive bull runs? That is exactly the situation we are in right now. Ethereum is trapped beneath its 20-day exponential moving average of $1,788 and its 50-day exponential moving average of $1,945, currently trading near $1,726. Now here is the signal that should make every serious trader pay very close attention. The weekly RSI for Ethereum has recently dipped into the 30 to 33 range. In the entire history of this asset, that level has marked deep structural bear market bottoms, the kind of exhaustion points where selling pressure has statistically reached its absolute limit. Could Ethereum go lower? Yes. Is it even remotely likely that we see a full collapse from these deeply oversold weekly readings? The historical probability says no. Is it possible the market breaks below the $1,500 macro support? It is technically possible, but the probability is increasingly stacked against the bears at these levels, and every single day the weekly RSI stays compressed in this zone, the snapback energy builds. The trigger to watch is a daily close above the $1,787 to $1,800 resistance zone. If Ethereum clears that hurdle, the technical path toward $2,000 opens up, and BMNR's stock price will follow that move with amplified leverage because of the direct correlation between ETH's value and the company's entire treasury base. And if BMNR's price starts moving higher, it is going to run directly into one of the most dangerous market mechanics you can encounter as a short seller, a full-blown short squeeze. Right now, there are 26.53 million shares sold short, representing 4.73% of the total float. That is a heavy baseline of bearish positioning. But the detail that makes this particularly explosive is the days to cover ratio, which is sitting at only 0.89. That means if any positive catalyst hits, short sellers have less than one full trading day to cover their entire position before getting wiped out. And here is the kicker. Because the borrow fee is absurdly low at just 0.28% annualized, bears have been lured into a false sense of security. They think they are sitting on a cheap, comfortable short. But that comfort is going to become a cage the moment a catalyst forces mechanical covering. When it happens, the buying will be violent and it will be fast, and that is not the only derivative force setting up here. Looking at the options chain expiring June 26, 2026, we see a distinctly bullish lean. Call open interest is sitting above 50,000 contracts versus 35,000 contracts on the put side, giving us a bullish put-to-call ratio of 0.70. There is a massive wall of puts at the $15 strike acting as a structural floor, keeping the stock pinned above that level with institutional support. But above the current price, a gamma wall is building at the $16 and $16.50 strikes with heavy call concentration. Implied volatility is running dangerously elevated, sitting between 70 and 78%. What this means mechanically is that if the stock breaks above 1650, market makers who sold those calls are forced to aggressively delta hedge, meaning they must buy the underlying stock to balance their books. This is the gamma squeeze engine. It is not speculative. It is mathematical, and there is one catalyst powerful enough to light that entire fuse: the Russell 1000 index inclusion. This is the guaranteed institutional catalyst, the one that generates buying pressure regardless of anyone's opinion, sentiment, or analysis. BMNR is highly favored for impending inclusion in this massive benchmark index. And when that mandate drops, passive funds and institutional ETFs that track the Russell 1000 are legally required to allocate capital to BMNR shares to rebalance their portfolios. The buying does not require a bullish thesis. It does not require agreement on Ethereum's direction. It simply must happen because the fund's mandate demands it. That is institutional buying on autopilot, and it creates the kind of sustained upside pressure that can crack overhead resistance and ignite everything we have talked about: the gamma squeeze, the short squeeze, the revaluation toward book value. All of it converges around this one event. Now let us build the exact trade execution playbook for the week of June 22nd through the 26th. This is the moment where everything comes together into actionable steps. The directional bias is unambiguously bullish and long. This is a contrarian value play combined with a short squeeze candidate. Your entry zone is between $15.80 and $16.15. You want to accumulate within that consolidation band as close to the 5-day moving average as possible. As you build your position, keep 3 overhead levels in your sight lines: the gamma call wall at $16.50, mid-level resistance at $17.36, and the 200-day moving average at $18.43. Your short-term price target for this week is $17.50. This fills the technical gap created by the initial preferred offering panic. If we get extended momentum off the ETH breakout and Russell inclusion flows, the macro target is $19 even, which retests the previous range high. Now, because implied volatility is hovering near 78%, buying straight call options outright is a rookie mistake. The premium is overpriced, and you are extremely susceptible to volatility crush the moment the move resolves. Instead, here are 2 professional-grade alternatives. Option 1. Sell the $15 puts expiring June 26th or July 10th. This strategy collects the inflated premium while leaning on the institutional put floor at $15. You are getting paid to have a bullish view, while the structural support does the defensive work for you. Option 2. Execute a bull call spread by buying the $16 call and simultaneously selling the $17.50 call. This structure precisely mitigates volatility crush while capturing the exact breakout move toward our short-term gap fill target. The spread costs less, the risk is defined, and the profit zone aligns perfectly with our thesis. Now, every single trade needs hard risk parameters, no exceptions. Your soft stop, the level that tells you the momentum is stalling, is $15.40, which is the recent local low. But your hard stop, the absolute invalidation level for this entire bullish thesis, is a daily close below $14.30. If the stock closes at or below that structural floor on a daily basis, the thesis is dead. Exit the position, preserve your capital, and wait for the next setup. There is never a reason to ride a broken trade. Risk first, always. Here is what you need to remember as your final takeaway. BMNR represents a genuinely rare convergence, deep, fundamental value backed by over $10.4 billion in hard assets, massive, verifiable institutional conviction with BlackRock, Citadel, and ARK all buying simultaneously, a corporate action that has been almost universally misread by algorithmic systems, Ethereum approaching a historically significant macro exhaustion level, and a guaranteed institutional catalyst in the form of Russell 1000 inclusion that forces buying regardless of sentiment. The risk-to-reward ratio here heavily favors the long side. Keep your stops tight at 1430, watch the gamma walls at 1650, and watch Ethereum for that breakout confirmation above $1,800. Before we wrap up, I want to be very clear about something important. Everything discussed in this video is for educational and informational purposes only and does not constitute financial advice. I am not a licensed financial advisor or investment professional. Trading stocks and options carries substantial risk of loss and is not appropriate for all investors. Past performance of any strategy discussed here does not guarantee future results. Always conduct your own due diligence, consult with a qualified financial professional, and never invest more than you can afford to lose. The analysis presented here reflects information available at the time of recording and may not account for all relevant risk factors or subsequent market developments. Now, here is the question I want you to sit with and leave in the comments below. Do you think the Russell 1000 inclusion alone is powerful enough to crack BMNR through that $19 resistance, even if Ethereum stays range-bound? Drop your answer below. I genuinely read every single one, and it sparks the best conversations on this channel. If this breakdown gave you clarity, a like takes you 2 seconds, and it tells YouTube's algorithm that this kind of deep dive analysis is worth putting in front of more people. So please hit that button. And if you are not yet subscribed to Smart Stock Sam, what are you waiting for? Hit subscribe and turn on the notification bell so you never miss a setup like this one. You can also show direct support for the work that goes into these breakdowns by sending a super thanks right here on YouTube. Every single one genuinely means the world to this channel and keeps the deep research coming. And finally, for those of you who want to go beyond the public videos, I have just launched the Smart Stock SAM members community. Inside, you get early access to trade setups before they go public, exclusive priority replies to your queries, and a group of serious investors and traders all committed to leveling up their craft together. The link to join is right below in the description. As always, trade smart, manage your risk, and I will see you in the next update.